I think we can all agree that the run Tesla has been on has been very impressive. It has made a lot of investors a ton of money and many investors very happy. Unfortunately, I am not one of them. Having 164% return over the past 3 months is crazy to see and is very impressive that Tesla was able to accomplish that. But while the spotlight was focused directly on Tesla, there's actually a much smaller company out there that returned over 300% the past 3 months and did much better than Tesla. So today, we're going to talk about that smaller company for our Watchlist Wednesday. Hey everyone, and thanks for joining me today. My name is Matt. And the company we're going to be taking a look at today is eXp Realty. The ticker symbol for that is EXPI. So before we really start talking about EXP, just a few things that I wanted to mention first. Many of you know that I left my job in finance to work in real estate, but I should just say I don't work for EXP and I don't own shares of EXP. I work for Costello. Not that Costello. I work for Costello Real Estate and Investments, which is just a local branch here in Charlotte. So link below if you need help finding a house in Charlotte. That's the best way to get in contact with me. Anyway, other thing is I lost internet last night, so I don't have the typical information that I usually have for these. A lot of times what I do for research is watch like videos on the companies and even like their training videos, earnings calls, all of that. And then the morning of is when I gather all of like the numbers and everything, just so that way the numbers are as up to date as possible. But we don't have internet, and I did not save a lot of my notes either. So this will be a quick video, but again, hopefully I'll be able to give you the same information that you look for when I do these Watchlist Wednesdays. With that out of the way, we can proceed. And let's give some background information for eXp in case you're not familiar with them. So eXp is a real estate firm that started in 2002. As of now, they have around 30,000 agents underneath their name, and they operate in 49 states in the US as well as 2 Canadian provinces. And this has been an exponential growth for them over recent years. I have a graph that'll pop up here so you could see how fastly they've been growing the number of agents they have. And we'll talk more later about why that could be important. I believe the founders of eXp were previously stockbrokers and left finance to work in real estate, something I can kind of relate to. But when they got into real estate, they noticed there's a few things wrong with the industry. And one of them being that real estate agents don't typically have retirement plans at the firms that they work for. And unfortunately, what that means is many real estate agents end up working all the way basically until they die because they don't have money saved up in like an IRA or a 401k plan or anything along those lines. So one of the missions that they set out on was to offer real estate agents benefits that you don't typically receive as a realtor. The founders also wanted the agents to have ownership in eXp. So in 2008, the founders of eXp Realty took the company public. Now, the founders also had another vision for this company, and this is what stood out to me when it comes to an investment perspective. And that was to be a virtual real estate firm. Having a brick and mortar office can be very expensive to operate. And in today's day and age where everything is run by text messages, emails, FaceTime, and DocuSign, there's not really a need to have a brick and mortar office because a lot of this work can be done remotely. And a lot of business that we do is just at somebody's house. So the brick and mortar, if anything else, it could just be more of an advertisement more than it is a place for you to go do your business. But brick and mortars do have one positive side to them, well, among other things, and that is that they do create a corporate culture when you have everybody gathering in the same building. Now, in order to compensate for the lack of that brick and mortar structure, but still creating a corporate culture, eXp has a subsidiary that had a pretty good solution for this, and that's called Verbella. And that is actually the main reason why I'm very interested in this investment, but it wasn't when I started looking into it. So let me explain to you Verbella. I don't know how many of you had the Nintendo Wii when it came out, but when the Wii came out, one of the first things you did was you created a Me, which is just an avatar, and you saw other people's avatars, and it was a pretty cool thing. Well, that's kind of what Verbella is. But Verbella is essentially just a virtual campus of an office, and I saw videos on it. It's actually really cool. So you have an avatar, you operate on your computer, and then you just kind of navigate throughout this campus. If you see somebody, if your friend is also an agent that works for them and you see them on campus, you can actually walk up to them and talk to them using your regular computer audio, and it's set up so that you can only hear the conversations within your proximity, just like you would in the real world. From some of the other examples I saw where this could be beneficial outside of real estate, hopefully this will help paint the full picture for you, is things like career fairs. So they did have something set up where everybody had different booths, and you could put your own brand logo on the back of the booth, and then people can actually navigate through this and go up to you, start speaking to you, collect information. You can email them files directly through it. So it was pretty cool. That's one example. They also even have it set up to where it's like a college classroom. I know at ECU there was a lot of classrooms I had were more of that like auditorium style where you look down into the professor and there's like the rows of the seats. Well, this Verbella campus thing has that same feature where if somebody's giving a presentation, you have your presenter in the front. They even have like a virtual laser pointer for their slides, and then everybody is just kind of sitting there in the classroom watching this presentation, receiving the slides, and it's almost like as if you're watching this in person. Now, admittedly, when I first started reading and looking into this, I didn't get it. I was like, this just sounds like a more complicated more complicated way to interact with people, and would just be easier to use something like Zoom or Microsoft Teams instead of this Verbella platform. But after reading people's reviews that have actually used this service before, they say that it is a much better way to engage with the people around you, maintaining cultures among companies, and it's new and it's attractive right now, and people have absolutely raved about this new platform. So if you have a few minutes after you finish watching this video, I do suggest just looking it up. I'll pop up how it's spelled on the screen so you can look up this system, because it's really interesting and I'd love to know your thoughts on this. I think it does have some potential, absolutely, but practicality wise is kind of where the issue comes into play. But again, it's actually something that at first I did not like at all and I just didn't get it. But the more and more I looked into it, the more I actually started to fall in love with this service and now I want an opportunity to try it out. And also, I would be lying if I didn't say that with this platform, or this Verbella, wasn't the main reason, I think I already said this, why I'm interested in this stock. And part of that has to do with, I think Verbella has the ability to be a spinoff from EXP. And if a spinoff happens, what that means is you still maintain the same amount of shares you would own of EXP, but you would also get a few shares of Verbella from the spinoff. And again, I think that this is something, especially as we move into this more virtual world, people are going to be looking for alternative ways to collaborate. And again, I think the key here is maintaining that corporate culture. And this might be the solution to that. So this has potential, and I think that it makes the offer that EXP provides very attractive from an investor standpoint. And per usual, I have some numbers here to go through. Again, we've already talked about the return, but just a few other numbers here and help you understand how EXP is doing as a firm. So ironically, I actually was thinking about reviewing AT&T this week because of the news of them dropping DirecTV, which seems to be the biggest thorn in their side. But I was then looking at the MLS. I was looking up houses for somebody I'm working with right now, and I was just taking a look at kind of how many new listings have there been, how many homes have been sold, and this really stood out to me. And I'll pull this up so you could see it, and I'm going to look at my screen here. But I saw, if you see here, this is from 2 days ago. 2 days ago, there was 149 new listings on the market. That's a lot of houses to hit the market. But what's more impressive is there was 307 houses sold. So more than double the amount of houses hitting the market were sold. And I'm sure everybody's market's different. This is really specifically for the Charlotte area, Charlotte, North Carolina. But houses have been selling like crazy recently. I know somebody who's a real estate agent at a different firm, and they had 6 offers on a house before it even hit the market. It was one of those like coming soon listings. And so houses are selling like crazy. And I thought this could be a good opportunity to buy into a real estate firm. We have exposure to REITs, and we have exposure to the income that those REITs provide through realty income as well as VNQ, but I wanted some kind of growth in real estate. And that's where I thought maybe a brokerage would be a good option. And that's ultimately what led me down the path to finding EXP, because not a lot of real estate firms are publicly traded. RE/MAX is, and there's a few other, but I really liked what EXP has to offer. I also know a few people that work for EXP. They really love the company and they've been hyping up the stock a lot. So I was like, let me take a look into it. And I've been pretty impressed with what I've seen so far. So these numbers caught my interest. Other people talking about it caught my interest. And I was like, forget AT&T. Let's go ahead and take a look at EXP. So that was the first numbers that caught my attention. And as always, I have my other numbers that I'm sure you guys are so curious about here. All right, let me pop that up on your screen so you can follow along with me here. We can see it's trading around $45.47 a share. So, it's a relatively affordable stock to buy. Market cap of $3.12 billion. I think EXP is by far the smallest company we've taken a look at. And I usually don't look at companies with small market caps because they are a little bit more risky of an investment. But given the performance that EXP has had over the past 3 months, I had a hard time staying away from it. And that could just mean it's going to offer us a lot of growth potential, which I am okay with. Forward PE ratio of 184.32. Yeah, that's probably the highest PE ratio we have on a stock as well. So smallest company, highest PE ratio. This is straying away from my normal investing strategy. I will admit that, because as you've seen, I buy companies like Ecolab, McCormick, Adobe, Waste Management. So this one is definitely out of the box. But like I said, when I was kind of reviewing my investing strategy, I felt this portfolio was getting a little bit too safe. And I think there could have been more opportunities for growth inside this portfolio. Yes, with that does come risk, but given how safe the other investments are that we have in this portfolio, I felt comfortable with looking at something that was more aggressive than what we typically look at. And actually, if we skip a few and look at the beta here, 2.76, also the highest beta we have. So this one is very volatile considered, or when you compare it to how the market performs. But again, with that volatility, we see almost 61.5% year-over-year revenue growth, which is great to see because obviously we want to see that this company is growing and expanding, especially with having 30,000 agents. The more agents you have, in theory, the more houses you should be selling, buying, closing, all that. Because real estate is a numbers game, and it really comes down to how many transactions you can do. So it's good to see that they're able to grow their revenue growth, not necessarily for other agency firms, but as the investor, it's a good thing to see. And I think I should just pause right there too. So as I mentioned, it's good to see their revenue growth is doing well, but other agency firms, kind of hurts because that means they are taking the share away. And as an investor, that's a very important thing to do, is separate yourself from the investment. So it would be easy for me to look at this and say, oh, that's my competition, I can't buy that, and just keep moving on. But you also need to take a step back and say, this might be my competition, but they are also performing very well. And since this is real estate, there's no conflict of interest in me buying their stock. It could be something worth taking a look at. And easier said than done, I'm well aware, but sometimes you really just need to remove yourself from the picture to really understand how well the company is performing without having any bias towards it. Return on equity of 12.27%, that is also great to see. Current ratio is a little low for a virtual company, but I'm aware too that these real estate firms, especially EXP from what it sounds like, offers a lot to their agents. So training programs, help with running, and there's a lot of expenses that go into being a real estate agent. And so with them having a lower current ratio, I can only assume that means that they are putting a lot of money back towards their agents, which in the long run should help EXP as a business, because the better their agents do, the better they do. And so to me, that is definitely a worthwhile investment. And it's good to see that 1.83, again, while that's low, it's better than it being less than 1. So they still have a good amount of cash on hand. I'm comfortable with all of these numbers. And I guess kind of the final determination here for me was also simply Wall Street's valuation. Now, I said last week, but just briefly here in case you didn't see that video, I use Simply Wall Street because it's just easier than me having to go through and type in all of the numbers. It's truly the same exact model that I was previously using, the discounted cash flow analysis. So just to save time and make these easier and make it look a little prettier, I just decided to stick with what Simply Wall Street has to provide. And if we take a look at their numbers, this shows that EXP is undervalued by about 10%. So there is some upside potential. Is this a huge room of growth? No, but again, it's still offering the growth potential. And I really do think EXP can go much higher than this because they're really shaking up the real estate industry and changing the ways that it's performed. And really, real estate has been done, with the exception of like the MLS being online or the super key lockboxes. Real estate's really been done the same way for years now. And so it's good to see some change happening in the industry and just some innovative ideas happening towards it. So I'm happy with this, and I have to admit, I just went ahead and already purchased these shares because while I was connected to a hotspot, rather than disconnecting and reconnecting all of that, we went ahead and bought it. Now I'll pull it up here on the screen, and you can see this as well. This is from the portfolio. I don't know what was going on. I guess it just wasn't my day today. But so as you'll see here, it just shows that today's gain was how much we invested in it. So we put $2,312.80 in. We bought 80 shares. It was trading at $47.30. I think it said when it was executed, and last I saw it was down. I'll double check that price right now. Ooh, that's not good. Right now it's trading at $43.60. So we've lost a good amount of money so far in this one. Maybe not my best decision, but that's okay because as I was just saying, there's still a good amount of upside potential for this one, and I'm comfortable with a little bit of dips just given that the other 19 positions we have are all profitable. So for the 20th one, I think this is the 20th Watchlist Wednesday. That is super cool, and I don't have internet. Maybe that's a sign that we should just call it quits here. Just kidding, I'm not stopping this series. I really enjoy doing these videos, but just taking an overall look here at the portfolio. So we've doubled our money since last week. To err on the side of safety, I'll just call that 18,000 because I think it's saying that the amount I put into EXP was a gain. That's not the case, but we're up around $18,000. Last week, I think we were up around $15,000. So portfolio's been headed in a great direction. Peloton has really been leading the pack, which I'm very surprised about, but I'm okay with it. And of course, we have a few stragglers in there, but I think overall, everything has been going very smoothly here so far. So happy with this portfolio still. And again, still enjoy making these videos, even after 20 weeks of looking into them. But I apologize in advance that this was maybe not my best video for a Watchlist Wednesday, especially if you're new here. Typically, these are a little better, but it gets difficult without having internet, trying to do everything from your phone or screenshots. So next week, hopefully, will be a little bit better of a company. But I'll stop myself from talking here, and we'll go ahead and wrap up this video. If you have any questions for me, any stocks you'd like for me to take a look at, or just any kind of feedback to make this more entertaining, please leave that in the comment section down below. I love the feedback, and it really helps me grow as a channel. If you like this, I hope that you give it a thumbs up, and if you haven't subscribed already, I just ask that you consider doing so. Really helps out my channel a lot, and I'm at like 232 subscribers. I gained like 10 subscribers in 2 days, which is great to see. And I'm just so appreciative of all of you for taking the time to not only watch my videos, but give your feedback and subscribe to this channel. Really means a lot to me, and it goes a long way for me, so thank you again. With all that said though, I will go ahead and finish up here. So thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But with that said, I will let you go ahead and enjoy the rest of your day, and I will see you next time.